The S&P 500 finally broke down from the consolidation area, and it is appeared to be heading down. We're going to analyze the S&P 500 and see where it might end up, and also take a look at the stock market sentiment and the internal and see what they are telling us. From this index chart, we can see that the Nasdaq 100 and the Nasdaq Composite made another new closing high last week. But all the other indexes have been pulling back. And look at the transportation. The Dow Jones Transportation is pulling back toward the December 2018 low. Even the Nasdaq 100 and the Nasdaq Composite is also pulling back after closing at a new high last week. Looking at this weekly S&P 500, you can see that last week it printed an inside bearish candle. And also for the week, it essentially lost 93 point or a little bit 3%, a little bit over 3%. And it is still 817 point above the March low of a little bit over 37%. And 384 points away from the all-time high, or 11.33% away from it. And here, looking at the daily chart of the S&P 500, you can see that there was some consolidation going on, and it was trying to break out of this consolidation area on Tuesday and try to get up to fill this gap. But it failed to follow through, and on Wednesday it broke down, and on Thursday it tried to come back into this consolidation area. Then Friday it just sold off. Before we take a more detailed analysis on the S&P 500, let's go and take a look at the stock market sentiment and the internal and see what they are telling us. Here, looking at the sentiment chart, you can see that the VIX is still above this 30 level, and it's been remaining at this level between the 30 and 40 for the entire week. As a matter of fact, also from the prior week. And the put-call ratio is actually getting back into this zone here between the 0.75 and 1.0. There are fear in the market, and risk is off. And looking at the New York Stock Exchange up-down volume ratio and also the advanced decline on a daily basis, you can see on the up day, the up-down volume was not that strong. And on the down day, the up-down volume is relatively strong or relatively negative compared to the update. Similarly, on the advanced decline, you see the advanced decline is relatively low. Not that many advancer over the decliner on an update. But you look at these 2 days on Wednesday and Friday, the 2 down day, the advanced decline really expanded to the downside, much more negative on a down day than on up day. If you take a look at on Monday, the up-down volume ratio is only 1.18 in favor of the up volumes. Same thing on Tuesday, 1.16. And then on Thursday, it expanded a little bit at 3.2 in favor of the up volume. But on Wednesday, the up-down volume was minus 10.28 in favor of the down volume. So there are 10 times more down volume than up volume on Wednesday pullback. And then on Friday, it was actually minus 5.9, almost 6 times more down volume than up volume. And likewise, look at the advanced decline. On Wednesday, the advanced decline, there were 2,394 more decliner than advancer. And on Friday, there were 1,931 more decliner than advancer. And look at Tuesday, when it made that gap up, it was only 502 more advancer than decliner. Even on Thursday, it was only 784 more advancer than decliner. So you can see from these up-down volume and also the daily advanced decline, there are more selling pressure on a down day than buying pressure on an up day. And looking at the New York Stock Exchange new high, new low, you can see that the new high, new low is still very subdued. Although on Friday and for the entire week, as a matter of fact, it stay above. In other words, there are more new high than new low. Even on the Wednesday, it was one new high over the new low. So That is in a way positive, but it is relatively low near that neutral line. So any further downside, it could easily tip this new high, new low back into negative territory, just like over here. And here we are looking at the New York Stock Exchange AD line. You can see that there is this negative divergence here. And that is, again, it's a clue to tell us to be prepared for a pullback. So these negative divergence is very important. It sends us a message to be cautious. And if it's a positive divergence, it also sends us a message to get ready for a little bit of a rally. Right? In the recent days, we saw this negative divergence on the advanced decline in the New York Stock Exchange, and so we are not surprised to see these pullback. So here, looking at the Nasdaq new high, new low, similarly to the New York Stock Exchange, is still relatively at a very low level, although it is positive for the entire week, even on the down day. So in that sense, it is positive. But again, we are not seeing the expansion. Although on Tuesday, when it made a new all-time high, it did come up to 190. It'd be much better if it was up at the near that 300 level, essentially like these level here, somewhere around 365 and 379. But right now, it has such a low level. Once again, it's just like the New York Stock Exchange. If the S&P 500 or the Nasdaq 100 continue to pull back, it could very easily tip this back into negative and end up with more new low than new high, just like here. And once again, looking at the Nasdaq AD line, you can see this negative divergence as well being in play here that flagged to us of a potential pullback. And even as it makes new high, you look at the advanced decline, it is much lower than the previous high. The negative divergence there always kind of tell us to be prepared for potential counter move. So that's why it's important to watch these market internal when you are watching the indexes to see what is the state or the health of the market. Now let's analyze the S&P 500 in a little bit more detail. Remember last week we essentially talking about this area here, and if it's able to break above this consolidation area, then we look for a continuation of moving up and fill this gap and possibly get into this 3214 and potentially 3259.81. Then we'd be looking for the possibility of coming up and fill this gap. But that did not occur, and instead what it did is it came up on Tuesday, but then on Wednesday it actually broke down from it, and right now it seems to be heading back down, and we essentially been watching the 618 level here at the 2934.49. And right now, it appears that it might be coming down and test for support at this level. So for next week, if the index come down to test this 618, then we want to see would it be able to get a bounce back up. And if it does get a bounce back up, we do have this new trend line that could act as a potential resistance. Okay, so this 3090.92 could potentially be a resistance area for any sort of a bounce. If it is unable to bounce up and continue to move down and unable to hold this 618, this 2934 area, then we're essentially looking for it to continue to move through and come down to possibly test at this 50% retracement near the 2792.69 for potential support. I believe right now it's still too early to focus on this level here at 32.8 retracement level, somewhere around 2650.89. And definitely I'm not talking about the March low because that is still much distant away and too early to even consider that the index might come back down and retest this low. Right now, there are no evidence to indicate that it will come down to retest that March low yet. So anything is possible, right? Things could change. So right now, we're basically just focusing on the near term, and the near term is this 618 and the 50%. Let's go and take a look at the ETF, the SPY. So as you can see, on Tuesday, the price came up to this consolidation area, but failed to follow through with a breakout to come up and fill this gap. Instead, on Wednesday, it broke below this consolidation area, and on Thursday, it tried to come back up, but unable to get into this balance area. And then on Friday, it just broke down and closed below this composite point of control at 300.9 level. Now let's go and update the volume profile. The interesting thing is on Tuesday, the point of control actually shifted up to 312. So that would be very encouraging for the bull. But unfortunately, it wasn't able to follow through with the upside breakout and get into the gap and move toward the 320 area. And on Wednesday, it moved back down to this 303 area and close out the week somewhere close to that 303, 304 area. And on Friday, you can see that breakdown below this composite point of control, although it's still up from the 300 level, and that would consider as a bullish move. But since it came up to this 312 and then now it's shifting back down, and that would interpret it as a bearish move. So right now we're going to see what it continue to move down to this 618 level at 292.93, and there is this 297.97 level that we've been talking about for quite a while. So we're going to be watching to see will the price come down here and see will it get some bounce or support and shift it back up, push it back up toward the composite point of control near this 303 area. Now we see a trend line down here. So next week, if we see a bounce off of this, 297.97 or near this 618 at 292.93, then the first level resistance would be this 304 area, and then this trend line up here at the 308.47. And on the downside, we're essentially looking to see would it be able to hold support near this 292.93. And if it doesn't, then we're essentially looking for this thing to continue to move down and toward this 50% retracement level at 278.87. And as you can see, there is also the rewrap somewhere around this 281.20 area where we also have a level of potential support. So on the downside, is basically looking for this to see would it be able to get some support at the 618. And if it doesn't, then we essentially are looking at the 50% level. So if it continue to move and break this composite rewrap, then we essentially are looking for a move down to this 38.2. And this big area here, remember we talked about this pivot high here after the March low, and that would be a major support level that we'd be watching for near this composite value area low. Now, also the other thing is I'm going to adjust these trend line here. As you can see, there are some new pivot level, and it has broken to these two trend line. It broke down from it. So I'm going to remove those trend line. I'm going to start drawing a price channel, because if I connect these points here, and if you notice that it also line up to these highs. So essentially right now, that wedge have morphed into a price channel, and it has broken down from this price channel. So once again, if the price could get back above this point of control here, this composite point of control, then it basically coming back into this price channel, then we could look forward to see would it be able to move back up and try to once again fill these gap and get into these gap area. But right now, we're essentially looking for a potential further pullback into this 618 area and possibly into the 50% retracement at 278. All the FANG stocks show a bearish candle last week. Look at Facebook here, got an engulfing bearish candle, and Apple got shooting star after making a new all-time high. So did the Amazon. Amazon also made a new all-time high and closed with a shooting star. Likewise for Netflix, and Google has a engulfing bearish candle. So in the coming week, I'll be watching these FANG stock to continue to pull back. So in summary, the advanced decline is weakening, and the new high, new low in the New York Stock Exchange is relatively stable, but it is remain at a very subdued level. And also the sentiment is getting a little bit fearful and risk off, and most likely the S&P 500 will continue to pull back. It is too early to start looking and talking about the March low here, because right now, this even on Friday, it closed down and broke out of this newly morphed price channel. It is still 31% off of this low and 812 point above it. And from this peak, it went as much as 47.5%, or a little bit over 1,041 point. So there are still a lot of ground to cover if we're going to pull back. And these are the level that I'll be watching in the coming week is the 618 at 2934.49 and the 50% 2792.69. So those are the two key levels that I will be watching and see if the S&P 500 continue to pull back or to be able to find some support at these levels. So thank you for watching, and I hope you find this video to be informative. Good luck and stay safe.